Welcome to Ask gHawk Accounting, where I answer questions received from small business owners about tax accounting and how to run a profitable business. Are you wondering if you should buy or lease your next car through your company? That is an excellent question because the right choice could save you thousands in tax or cost you more than you think. My name is Lenah Oduor. I'm a chartered accountant, business coach, and the founder of gHawk Accounting. Today, we're talking about how to make tax-efficient vehicle buying decisions through your company. Please note that the answers in this recording are general. You should always seek professional advice for your specific circumstances. Let's get started. Today's question is from a husband and wife team. Hi, Lenah. We are currently leasing our vehicle personally, and the lease agreement comes to an end in a few months' time. Should we buy our vehicle outright through the company, or should we lease it through the business so that we can claim the expenses of running the vehicle through the business? Please advise. For context, A&M are a husband and wife management consulting business requiring extensive travel both nationally and internationally, so travel costs are a big part of their business expense. Option 1 is to buy the vehicle outright through the company. The benefit of doing this is that the vehicle is shown as an asset on the balance sheet, and the purchase cost can be claimed as capital allowances. And for zero-emission vehicles, you can claim up to 100% first-year allowance on the vehicles. Otherwise, you can claim a written down allowance depending on the CO2 emission bands that the vehicle falls in. You can also claim the running costs like insurance, servicing, repairs, road tax as deductible expenses, which helps to reduce your corporation tax. You can also claim VAT on the purchase cost of the vehicle, the running cost and fuel, if you can prove that the vehicle is used exclusively for business and there is absolutely no personal use on the vehicle. The second option is to lease the vehicle through the company. Lease payments are fully deductible as trading expenses, which will also reduce your corporation tax. The benefit of this option is there is no capital outlay. You're not having to spend a lot of money outright to buy the vehicle, which is really good for cash flow. And it also means you can claim VAT on the lease payments and the running cost of the vehicle, provided that it is strictly business use only. And just be aware that if there is any personal use, then the VAT that can be claimed is restricted. These two options are advantageous because you will be using a company car, regardless of whether it was bought outright or leased. And it means that you can claim the running expenses like insurance, repairs, road tax, lease payments, fuel. All of those can be claimed as business expenses because the vehicle is owned by the business. If at all there is any personal use, then it will trigger benefits in kind, and it will also reduce the amount of VAT that you can claim. I will cover the issue of benefits in kind later on in this presentation. So let's look at the pros and cons of buying versus leasing a vehicle. So when you buy, you own it for the longer term. You can claim the capital allowances, and you would need to have prepared for it and saved a huge amount of money to be able to buy the vehicle upfront, which can have an impact of your cash flow. And there's also a higher risk of benefit in kind. Looking at leasing the vehicle, it is easier on cash flow because there's no big upfront cost. The lease payments are deductible as expenses, which helps to reduce your corporation tax. If you go for an electric vehicle, there is low benefits in kind. And the main disadvantage really is that you never own the asset because you're leasing it, using it only for a short amount of time, and then having to give it back. If you decide to buy a company vehicle, my top tip is to go electric. Electric vehicles offer the best tax savings. You can get 100% first-year allowance if you go the extra mile and buy an electric vehicle as opposed to leasing it. You get a low benefit in kind, which is currently only 2%. The running costs of the vehicle are low. You can claim VAT provided there's no personal use. Electric vehicles really are a smart move for directors who want to be tax efficient while also just thinking about the environment and wanting to do good for the planet. Now let's talk about the tax on company cars and how the benefit in kind works. If the company car is available for private use, including commuting, a benefit in kind charge arises. Benefit in kind is calculated as a percentage of the car's list price, which is then adjusted for the CO2 emissions and the fuel type of the vehicle. Electric cars currently attract the lowest benefit in kind rate, which is 2% for the tax year 2025-2026, making them very tax efficient. Directors will pay income tax on the benefit in kind. So let's say we work out that the value of the benefit in kind is £1,000. This will be added to your earnings to calculate the income tax payable on that amount. And on the company perspective, the employer will pay national insurance contributions at 13.8% of the taxable benefit. So you get taxed twice, first on the director's income tax and again on the company's national insurance contributions. If there's no private use at all, you do not pay benefit in kind, but you must have very good records to prove that there is no benefit in kind in use, and you must also have contracts in place that restricts individuals or directors using this vehicle for personal use. In addition to the company car benefit, when a company provides fuel, HMRC assumes that the director is also getting fuel benefit. And this is in addition to the car benefit. So there's only two options where fuel benefit does not arise. The first option is where no private fuel is provided, and this is where the director pays personally for all fuel, both business and private, and the company reimburses the business miles at the advisory fuel rates, which are provided by HMRC every quarter. If you've managed to set it up that way in your business, then there will be no fuel benefit that will arise. The second option is where the company pays for all fuel, including both business and private, but the director reimburses the company for the cost of private fuel, again calculated using the advisory fuel rates provided by HMRC. If we can demonstrate that the director is paying back to the company, then fuel benefit charge does not arise. If the director does not reimburse the private element, then HMRC will apply a fuel benefit charge, which is calculated based on the advisory fuel rates published on HMRC website. So let's compare the different situations in terms of the taxes and the benefits that arise from company vehicles. If both the car and the fuel are used privately and there is no repayment, then there will be benefit in kind on both the car and the fuel. This situation leads to high tax for the director and also for the company. If the car is used privately, but the fuel is paid by the company and the private element has been reimbursed to the company, you only get taxed on the benefit for using the car, but not the fuel benefit, which lowers the tax because there's no fuel benefit. If the car is used only for business use or private use of fuel is reimbursed, then private use of the car will lead to the benefits in kind for use of the car, but not for the fuel. And there is another third option that we haven't discussed yet, but is worth considering, is where the director owns the car personally and gets reimbursed by the company for the mileage used for the company. This situation avoids benefits in kind on the car benefit and on the fuel benefit, which is the most advantageous position to be in. Let us look at that final option again in a little bit more detail. This is where the directors own the vehicle personally. It's not a company car. And then when they use the car for business journeys, they keep a record of that and get reimbursed for the mileage used for business. The benefits are there's no benefit in kind tax since the vehicle is owned personally. It means you can claim business mileage at HMRC rates, which is currently 45p per mile for the first 10,000 miles. And thereafter it drops to 25p per mile. And this covers the business's proportion of fuel, insurance, wear and tear, servicing, etc. So you can't claim the mileage and also claim the running costs, but the rates are set in such a way that the individuals, the owners of the vehicle, will be properly reimbursed for the equivalent cost of running the vehicle. Another benefit is that the company doesn't pay additional national insurance contributions. You're saving tax on 13.8% of the benefit, which would be payable if the car was company provided. It means you also have the flexible choice to pick the car that you want. You're not trying to pick a car that particularly fits the description of a commercial vehicle. You own it personally. You can make a choice based on your personal interest and in your personal requirements. It also simplifies the record keeping. You only need to keep track of the business mileage and not detailed logs of all mileage, including business and personal. It's got no impact on your VAT. That complexity is reduced further. You don't have to deal with partial recovery, or you don't have to worry about apportionment of restricting costs. It means there's no capital outlay for the business. The business doesn't have to fund a car purchase or lease it, which preserves the money in the company for working capital. And it also gives you more personal control. You own the vehicle. You're not bound by company policies or restrictions or contracts, which really it just gives you more freedom as a business owner. So thank you for watching this episode of Ask gHawk Accounting. In today's episode, we have covered the advantages of buying a company car, the benefits of leasing, and also the benefits of owning it outright. We have also looked at how benefits in kind works, both for fuel and for the car benefit, and an option as to why you might want to own your vehicle as opposed to having it owned by the company. If you're wondering how this would work for you in your business, or if you've got any further questions about owning or leasing a vehicle, then get in touch, book a review. We can look at your specific circumstances, how your business is set up, and how you actually run your business, and recommend best practices that are going to help you save on tax and enjoy the benefits and the perks that come with running your own company. To get in touch, send us any questions via our website, ghawkaccounting.co.uk/contact. Follow us on YouTube, on LinkedIn, or Facebook. You can send us questions in the comments below. We look forward to hearing from you and helping you maximize the opportunities that come with being a business owner, so that you can build a profitable business that gives you the total freedom you require. My name is Lenah Oduor. If you have enjoyed watching this video, please share and subscribe to get notified of the next video. Thank you for watching.